Hello folks, this is Jeff Camarda with yet another rant from the boardroom. Well, here's the latest export that we can expect from China. As you probably have heard or inferred from the news, the Chinese economy is inflating to the point where they are seriously approaching, if not full, then substantial employment in China. The reason our goods in the United States have been so low and inflation in this country has been tame for the past 20 years is mostly because we've been able to buy virtually everything dirt cheap at Walmart and other outlets due to cheap imports, cheap labor in China, India, and so forth. It looks like China, their economy is getting to the point where inflation and labor and other shortages are becoming a real issue. They're going to have to raise their own prices internally on top of the pretty safe bet that the Chinese currency itself, the yuan, is going to be forced by our pressure and other countries' pressure to rise against the dollar, making Chinese goods, which are already going to be more expensive because of their own price inflation, much more expensive in dollar terms here. As you probably know, if you've been following me, I expect massive inflation coming from the federal stimulus and all kinds of issues that are probably too extensive to get into here. On top of that, we will no longer have cheap access to TVs and tires and wiffle balls from Walmart and everything else you can think of. So, one more reason to start to formulate your inflation-beating strategy now, because it will be a bear of an inflationary climate to make the 70s look like, gee whiz, the stable 1950s. That's too long of a rant for me, Jeff Camarda. See you next time, folks.